And there you have it. The markets are officially closed on this Wednesday, July 30th. Welcome, investors and traders. I'm AJ Monte, and this is the Midweek Report Live. With me, I have Nod from NODLive. That's our news service that we put out on a regular basis. Very timely news, I might add. And Nod, I got to tell you, I was watching your feed as the Fed was putting out their comments, and it was as if the market was following every word up and down, but mainly down, as you can see from today's close. What do you have to share with our viewers today?
AJ, thanks for paying attention to it. I'm trying to do all I can to help, and good afternoon, everyone who's joining us. Yes, we did get the Fed rate decision earlier today, and I will get to that in a hot minute. But what I think was equally important today, AJ, was the housing data. So if we look at this first chart I have up, pending home sales data for June are in an absolute free fall. This chart tells us that the price of homes remains still too high for people, and rates are deemed yet still too high for folks to either enter the market or to sell their home and buy again. We're going to keep watching this data and keep an eye on rates. Now, speaking of rates, AJ, as we talked about, the Fed kept the rates at between 4.25 and 4.5 level. What sticks out to us today was that two Fed members, Waller and Bowman, voted in favor of cutting rates today. AJ, this was the first time two Fed members have dissented from the Fed decision since 1993. Now, these updated odds on the screen show that the odds of the Fed cutting rates 2 times in 2025 have now fallen to 36% per Cal sheet. Meanwhile, if you check out, the odds of one rate cut are up to only 25%, and the odds of 0 rate cuts are now at 20%. AJ, if Powell doesn't set the stage for a September rate cut soon, yields are going to surge. And with so much riding on every comment that he makes, everything is going to ride on this September Fed meeting. So, AJ, will you please take a look at the 10-year Treasury and maybe even a more tradable instrument for our viewers, maybe the IEF, and let us know what the charts are telling you?
Well, if you look at the 10-year rate here, this is on the Thinkorswim platform. It's /10Y. Interestingly enough, you've got these candles here showing pretty bullish candles. That's a bullish harami. Now, some people might be looking at this chart and going, how do you even apply technical analysis to the 10-year futures or even to the bond market? Well, the general market is what's really going to determine what the rates are through the bond market and through the auctions. It's not really the Fed. The Fed could lower rates, but it's all based on supply and demand and how much people are willing to borrow or how much they're willing to put into the bond market to loan to our U.S. government. But if you look at that, it looks to me like it could go up from here, and there's pretty good support right around this level right here just from earlier last week. And so I'm not going to go too far down the road into forecasting what the rates are because we more or less stick to the underlying markets themselves. But there are so many technical indicators to look at right now that are pivoting that's starting to make my head spin. Our 1-year track record for the Dow and several of the other major market ETFs is pretty high with regard to target hits. In fact, we have 21 out of the 23 targets for the last 12 months have already hit. And if the Dow, including the transports, if they continue to go lower, we're getting very close to hitting the most recent target, which would make it a 22 out of 23 hit rate. I don't think anyone could even come close to that. I would certainly hope if there's anyone in our audience that could come close to those percentages, please contact us so we could put our heads together and collaborate, because it's I have to give all credit to the charts for that kind of success. But our trades are based on those technical indicators. So we'll have to see how it goes here. Now, you have other charts that you have been looking at this week. And again, it's only midweek through the midweek report here. We still have a couple more days till the end of the week. But what else do you have that's giving us some, I guess you could say, some insight to where we could be going as we get closer and closer to September? Because, as history proves, September and October are the most notorious months of the year. And I have a sneaky suspicion we might even see some of that selling coming in towards the end of August as more or less a beat the rush kind of moment for investors that are carrying a whole bunch of risk right now. The investors are carrying the risk. Institutions are selling out of it, but the investors are still in there, and they're assuming that risk. So we'll have to see how that goes for them.
Well, I'm glad you brought up a lot of things, AJ. You brought up the hit rate. We've been working for 7 months on our new dashboard for our members, and we're going to have that within the next 2 weeks for them. I can't wait for people to see it, so they'll be able to track along with us live and have a much better experience than they're having right now. So exciting times here. But listen, some other data that we got today, AJ, was some GDP data. So let me pull up this second chart. Listen, the data came in fine. It was a little bit weaker than expected, but what I'm seeing, what sticks out to me most was what quote unquote drove this. Now, what you can see, AJ, was the biggest driver was imports. And we all know darn well that a lot of companies like Best Buy and whatnot loaded up early on in the year to front run tariffs, hoping and praying that the consumer would still have gas in their tank and dollars in their pockets to buy this stuff. We'll see what happens. But AJ, with this data in mind, and with that being kind of the core driver, you did talk about the transports. Would you mind pulling up either the Dow Jones Transport Trucking Index or JB Hunt? Because again, this really is kind of the bedrock of the economy.
Well, what you just mentioned with regard to the inventories, this is a repeat performance of what we saw in the COVID days, because we knew that there was going to be a slowdown in the supply chain. So retailers go out, they load up to kind of beat any kind of anticipation of running out of product. And then what happened, it kind of backfired on them, where they loaded up. Now their warehouses are full, and now they have to lower the prices to get rid of the inventory. But going to trucking, I want to back out quite a bit and go to the monthly here, because on Technical Tuesday video that went out yesterday, I talked about fan lines. Now, this absolutely is a great chart for learning or even establishing fan lines. Just a quick refresher from yesterday, and we could put the link to the Technical Tuesday video in the description box below after we post the recording. But you start off looking at the longer trend, and you can see here, I could go back as far as you want on this chart, but I'm going back to the early 80s, right here when I stepped on the floor of the New York Commodity Exchange, right there in 1982. And I just connect all of those lows to more or less bring a baseline into the picture. That's the original trend. Now, interestingly enough, at the end of the crash of 2008, beginning of 2009, we've got the last touch on that fan line. Now, watch what I do here, folks, especially if you didn't get to catch the video yesterday. I take that as my new starting point, and I go out and I connect the low here from 2020, and you can see that we have a higher low from 2009 to 2020. And that is the accelerated trend, also known as the fan line. So we have fan line number 1 down here, fan line number 2 here. But then I take the last touch of the 2020 low, bring it out here, and I project out. That is fan line 3. Now, that's on the monthly chart, you see. Now I'm going to zoom in a little bit because it's going to get really interesting here. We now have this touch from fan line 3 to this low here, which is projected out. Look at that. That is the fan line that we have to keep our eyes on, because if you're following my fan line rules, which I've been putting together and promoting for the last almost 43 years, if this fan line breaks, we now have an 80% chance that the price is going to drop into the next fan line in that sequence. And that's a pretty big drop. Now, I've talked about the transports for a good long time as more or less being the leading indicator for the economy, because if you follow Dow theory, you'll know that Charles Dow established the concept of, the transports have to match with the industrials and vice versa. But if both the Dow transports and the industrials start to tank, then I think you could see that seasonal selling that I was alluding to earlier when we start to get into September and October, and we might even get that rush into the end of August. We'll have to see. I don't want to jump the gun on that, but there's still a lot of opportunity out there, folks. It doesn't mean that we're looking for, oh my God, the crash is here, the world is ending. Even when we get dramatic pullbacks or even strong corrections, there's always going to be an opportunity on the long side because not all stocks drop. You're going to have some strength popping to the market, even if the transports drop to where the levels I'm talking about here. There's still going to be opportunity, and that's what we provide for our members through the trade notifications. And we're having a great time, as you know, right now.
Absolutely. So we talked about rates. We talked about the consumer. Now that leaves me. We have to talk about the dollar because that's all tied in. So AJ, if you check out this chart, the dollar is now using nearly 50% of global payments. And I love people like to talk about different diversification of payments, but this is the highest level in 12 years. Now the euro, not so much. So AJ, when you look at this dollar, can you look at either the DXY or a more tradable instrument like the UDN, which is one we've had success in before, and let us know what the technicals are saying there? Because again, this all ties together.
Well, check out the weekly candle here on the dollar index. That's ticker symbol $DXY on the Thinkorswim platform. That is a massive green candle right there. And again, this is the weekly chart, and we're only here on Wednesday. But notice, if I zoom in here, you could see today's close on the dollar. That's the weekly 20-period moving average. It's bumping its head or even just peaking its nose over that 20-period moving average. That's the weekly. If I go to the daily here on the US dollar, it looks to me like we're getting a breakout of what could be a head and shoulders bottom. Here, this area right here being the left shoulder, here's the head, here's the right shoulder, and there you go. There's the neckline. So yesterday and today, we've broken out over the neckline in that inverted head and shoulders. Now, if you're not familiar with the head and shoulder pattern, you could go on YouTube and Google that and search for that, and you're going to have so many analysts talking about head and shoulders. But it's a very reliable pattern. Now, this raises another question. What is going to make the dollar attractive if they're now lowering rates, right? I mean, you got to think about that. And we'll get into that crypto discussion with stablecoin maybe even next week, as we dig into what the stablecoin could do for the dollar and making it a lot more attractive on the global scene. And so I like the dollar here. You mentioned UDN. This is one way that you could trade the dollar, or UUP actually. UUP is the ETF. It's the bullish ETF that you could trade. And if you think the dollar is going to fall back, you could trade UDN. So that's the opposite or the inversely related ETF to UUP. Keep those on your watch list. You're going to find that these are very fun to trade because the dollar does follow the technical signals. And if you're trading UUP on the upside for the dollar or UDN on the downside, it's a very inexpensive way to trade the dollar. And you're not going to get hurt that much because the dollar doesn't have that kind of volatility where if you buy it at 27.84, it's not going to drop to 20 in a matter of hours or even days. It moves in smaller increments, and like I said, you're not going to get hurt too badly even if it goes against you. And that's not to say you shouldn't be using risk management. If you trade the dollar or any fiat currency or any currency for that matter, you got to be using risk management, and that applies here as well.
Well, AJ, I'm going to go a little bit rogue here and off my script, which makes me anxious. But with everything that's been going on, we have a lot of people in the chat. They're asking us now about the reaction to gold and silver. So let's dial it back. Let's remember that today was a Fed day. We had people, trading gold and silver in advance of it. Everyone feels that there's a pretty good chance that in September that rates are going to come down. So I think that explains some of the move that we've seen today. But taking all that out, can you just give a quick refresh on the technicals for both gold and silver, since that's one that we tend to focus on here in our community?
Right. Now, ticker symbol SLV is what I have on my screen here. And if you're following me on my X page, I did put out a chart on SLV, letting everyone know that I bought into my silver position. I bought more, not all of it, but I bought more. And the main reason I bought more is because of this gap fill right here. Hopefully you could see that. I'll zoom in a little bit more. So the gap here has filled. There is a good support level for silver just around the $33 area right there. And I like it, not just from a technical standpoint, even though I'm buying back in. This is more or less I'm scaling in with the cash that I have available, mainly because I'm buying partial positions on the way down. Now, should it bounce off of this key support level and form a pivot here, now I'm going to go in with a heavier buy order to get that going, because I think long-term silver, with the supply issues that we were talking about and the demand for silver as industrial metal, I think it's going to do very, very well. GLD, and then maybe we could even throw copper in there, because that was an eye opener.
Oh my goodness, that volatility into the close was insane.
That was absolutely incredible. Now, gold does not look as bullish as silver here, at least not yet, because you see this big red candle that I have right here. That big red candle has hardly any shadow underneath it. So the sellers were right in there right up until the close. And look at that volume down below. So if the volume persists tomorrow, we might even see a breakout in gold below this support level, right around the $300 area. Now, that would not surprise me at all, because the gold-silver ratio is still very high, which means relative to silver, gold is still fairly expensive, and relative to gold, silver is still relatively cheap. So that gold-silver ratio, I think, could fall back a little bit. And there's a gap open still here. I mean, gold and silver do a lot of gapping. But I would be more interested in buying gold right around this gap fill area, right around the 295 level. And so that's something to keep your eye on. Now, if you want to look at copper, I got to throw this one in there. Nod. Look, I'm sorry for laughing, but
that doesn't happen. That doesn't happen.
Well, here's why it happened. And it's important that you keep an eye on copper, because copper historically has been an indicator to the health of the general economies around the world, and particularly in China. And so when you look at copper and how the Chinese economy is hurting pretty badly right now, you've got copper dropping out of concerns for maybe economic uncertainty. Now, with regard to China, last I checked, they consume more than 50% of that metal.
Right.
I think it's closer to 59%. You would know, Nod, because you put that data out on your NODLive feed. And so if the economy in China is really hurting badly, and they're a big consumer of copper, what's going to happen? They're going to stop consuming it for a while. It's going to drop demand, increase supply. And you look at this weekly chart, it's almost obscene to see. Look at that. I could even go back 10 years, and you're not going to see a 1 week candle that long. I mean, I didn't even look at the monthly chart. What the heck is the monthly chart looking like? Oh, look at that. Very close to a bearish engulfing, but that's a massive, massive shooting star on the monthly candle there for copper. Now, again, it's still in an upward sloping channel, but I think it's got some room on the downside here. Support right around 4, I would say, is safe to say if you're even thinking about tiptoeing into that market. You got to be careful, because you do have limit moves in copper. With a move like that, limit down, you might even go and put some pressure on the next day. Yeah, FCX, Peter Mathis was put that in there. He closed out of his puts today on that. He took a put position, FCX. For Peter, let me just put FCX in there. Hopefully this
will go, Pilot Pete.
You know what? Look at that. I'm sorry to get excited, but I cannot help it. Look at my target on FCX. I don't know.
Yeah, we hit.
That target was 39.15 right there. And that was set on a rapid fire Wednesday, right around the beginning of June. And look at that, 39.15. Look where it closed, 39.14. 39.14. That's an absolute beautiful thing. Now, Pilot Pete and Peter there, I'm not saying you did anything bad by taking your profits. There's nothing wrong with that. But I will tell you, in the future, make sure you keep an eye on that volume, because coming into the close here today, FCX, which is Freeport-McMoRan Inc., that volume was tremendous. So you might even see continuation of that move lower. And I still have an open target, believe it or not, on FCX right around 33.45. We were not planning on talking about this one, folks, but I cannot help it. It's done a great job, an absolute great job, FCX that is, hitting targets. If you go back and look at all these targets in the past, all these diagonal lines are all targets that have hit. The only target that is left open out of all those targets is this one right down there at 33.45. So we're getting very close to 100% target hit rate on FCX. By the way, for those who are joining us for the first time on this YouTube channel, stay tuned. We're teaching our members how to forecast using these little diagonal lines in a thing called the trading checklist. It's a 7-point trading checklist that we promote and show our members so that they can do their own forecasting and keep it as accurate as what we're showing you here. Yeah, FCX is tremendous. Congratulations, guys, with those puts. You have 10 contracts, Pete? All right, good. Love it.
Well, AJ, we're going to keep it off script. I mean, I've seen some nice commentary. Let's go. Let's keep it going. With all of this going on, I mean, I think we need to refocus back on the IWM. I think, that when things were a little less uncertain, I think IWM was one that we followed when we had this, very strong bull run. It kind of went to the back burner. Where are you with regards to the IWM? Can you give an updated forecast on that with the technical?
Yeah, again, what you're looking at here is the last 12 months of price history for IWM. And again, just like what we showed you on FCX, these diagonal lines are former price targets that was set. And a lot of times I'll set upside and downside targets. We call those two-part forecasts, which, again, I don't think anyone does. I would hope they would, and I want to meet those folks, like I said. But if you look back, you have all of the targets on IWM, every single one except the two that are still open. It's this one here, 216.91, and we have this one way down here. These are the only two. So we have 21 out of 23 targets that have hit. If we hit this target here, which I think we will at 216.91, that will be 22 out of 23 targets hit. And you know what? I'm going to stick my neck out here. I think that target on IWM at 175.81 could wind up hitting in September or even as far out as October as we get into that seasonal selling in the markets. And if I take a step back and look, now the IWM isn't the big deal, right? It's not the big deal because you're talking about small cap stocks. But from a trading aspect,
right,
IWM does a great job trading. So we, as option traders, can trade in and out through put spreads, diagonal spreads, calendar spreads, and the like. And again, this is my longer term 175.81 target. It's not really that outrageous when you look at it and you back out. Even if I go to the monthly chart, is it really that outrageous to think that IWM could get to 175.81?
No.
We're almost at, look at this. We're almost at a triple top here. This is a double top. And while I don't think we're going to get all the way to the highs here that we had in the beginning of the year, if we pull back from here, this is going to be a major resistance area for IWM. And even if we get down to the 175 level that I have open as a target, we're still going to be in a longer term upward trend. You see, so I'm not talking about a crash in IWM. I am talking about a respectable pullback and even, you could say, a heavy correction at 175.81. So stay tuned for that. We'll keep you posted for sure as we keep our eye on these charts and report back to our viewers here. Yeah. Go ahead.
All right. Well, that was a bit of we went rogue, but I'm glad we covered some of that. We had a lot of people asking questions. So real quick here. So we know that the market's skewed against the individual investor, which is why, we get together and we need to get an edge. So if we check out this latest chart that I have here, what retail investors continue to buy equities, but professional investors and larger funds continue to sell. So if you look at this, institutional investors, AJ, sold $1.9 billion of U.S. equities last week and $8 billion over the last month. They've been net sellers 11 of the last 12 weeks. And with all that said, the S&P has now gone more than 20 days without a 1% move. I bring all that up because, again, volatility seems to have been quiet, but we know what happens when it goes stagnant this long. So going back and using your fan lines, AJ, can you give us a look at both the VIX and then maybe let's look at Bitcoin, because that seems to become a flight to safety or a flight to volatility while people look for more.
Well, actually, before we go to the VIX, let's take a look at SPX. This is the S&P index itself, because like I said, we went over the fan lines yesterday. And oh, by the way, I see the live chat hopping away Alexander is asking us to look at ON. By the way, if you're live, you could ask questions, you could comment. We'll do our best. We only got a half hour here, and we're down to 4.5 minutes left. But keep that in mind in the future. But if I take a step back and do what I did with those fan lines on the markets, look at that. We have 1, 2, 3. We're past 4 fan lines here, and the SPX has gone vertical in the recent months. As I zoom into the weekly charts here, you could see that we are right at that fan line right there. Remember what I said before? When the most extreme fan line in the sequence of fan lines breaks, you have an 80% chance that it's going to drop to the next fan line in the sequence. It's not 100%. It's not a guarantee. It's an 80%. And I've been tracking that for over 40 years. Don't take my word for that. You've tracked this yourself. Put your own fan lines on there, and you'll see. But we are right at that threshold right now, Nod. And in fact, today we have a full-fledged pivot in the SPX with a lower high, lower low. And notice how that fan line correlates very nicely to the 20-day moving average. Hopping to the VIX, what do we have here? We've got a pivot on the VIX. This is this long shadow at the end of a downward leg is more of an inverted hammer than it would be a shooting star. But we have a bullish engulfing candle yesterday on the VIX. My short-term target on the VIX is up here at 1948, which doesn't look like much, but that's $4 on a $15 price, $15.50 price. So percentage-wise, if you're trading the VIX, you've got opportunity here, and you could trade that through VXX, UVXY. There's a lot of different instruments that you could trade on the VIX. So I still have my upside target set on the VIX right here at 1948.
Look at that close, AJ. Look at that close on the VIX. Tim Lindsay wanted us to bring it to our attention. I mean, that's pretty telling.
Well, we do have a higher low, higher high. So there's your pivot on top of it. Now, don't confuse that body with anything too much. I mean, it would be interpreted in some instances if it was at the up end, it would be a bearish harami. But when you find everything at the bottom of a down leg, it's more bullish than bearish. Yeah, for the VIX, that is, which means bearish for the markets.
Right. So with this up, I mean, let's dive into Bitcoin, because again, that seems to have been a flight for volatility, and people are piling in. We know we don't need to go down the whole story of Bitcoin, but with where it has gone, with all the headlines, with rates, with regulation, I mean, it's kind of been relaxed at the moment. Where do you see the next move here, AJ?
Well, I still have a downside target, not that crazy, but I have a downside target at 108,500 on Bitcoin. Down here, there is an open gap. You got to understand that gaps form on Bitcoin, and a lot of times those gaps do fill. But when you look at the monthly chart on that one, again, it's overextended. I'm not in Bitcoin other than the Coinbase position that we have in our option positions, which is going to work out very well if Coinbase and some of the other crypto-related stocks pull back. But again, we have to see what happens with Bitcoin when they start rolling out stablecoin, because that's all uncharted waters there. We don't know what's going to happen when they roll out stablecoin and how that might affect as they say, the whales in Bitcoin. Will they liquidate some of that Bitcoin position to buy stablecoin? I don't know. Are they going to peg stablecoin to the US dollar and that's it? Or are they going to match it with a small percentage connected to gold or maybe silver? We'll have to see. There's a lot of unknowns there. But we've got a lot going on here, and I am so happy because the technical signals are working better than ever. And Nod, tonight from 6 to 7, we have the rapid fire stock analysis session where I'll probably cover 50 to 60 stocks in that 1 hour period. So if anyone's out there want to join in on our 15-day free membership, no strings attached, no sales pressure, none of that. If anything, you'll be talking to Nod as a 15-day trial member. He gets involved with our members there, and we'll guide you through the process of how we put our price targets in place.
It's a great session. Wednesdays are the best. I'm really excited people were here to join us live, AJ. I look forward to our rapid fire session. I know people are going to get there early. You're going to have great music pumped up for us. So you're going to field and forecast, tickers live. Again, they're not your recommendations, but it's just you fielding people's ticker requests and making your call on it. So it's really great. We thank you all for submitting your tickers on this live. If you like this here, please come and give us a shot. You'll love rapid fire. You'll love the rest of the content. It's a great supportive community.
Thank you, folks, for joining us on this Midweek Report Live. We'll see you next week. Stay in touch with the charts and keep your stops in place. And don't forget that risk management is the #1 priority in this market, especially as we come into September and October. Have a good evening. Take care.